Welcome to Cannabis Business Minds podcast with your host, Simone Samaluka-Radzins. Join me where I'll take you inside the ins and outs of this brand new and exciting business called cannabis. Connect with me on Calagia.com and follow us on social media as well. And here's today's show. On this episode of Cannabis Business Minds, we're going to hear from Matt Markiewicz, managing partner of THCX. He's going to break down everything that we need to understand about the cannabis stock market, because most companies in the cannabis industry are privately held. Many aren't traded on the public markets, and the ones that are traded on the public markets have unfortunately not been doing well. Now, as we can see with any new industry, there's going to be an onset of, compliance and regulation that a business is going to have to deal with. And in the cannabis industry, when you can't predict what's going to happen with regulation, and you go public, you have a lot of risk. And so we've seen the cannabis industry and the market go up and down and up and down. And with, unfortunately, what's happening right now with COVID, we see a huge plummet in general with overall stocks. And in fact, we haven't seen the stock market so low since 1987. Now, that goes up and that goes down, but if you're like me, you've seen a massive hit to your 401k. And if you don't have a 401k, let's talk, because everybody should be investing in themselves, in their future, right now, today. But on this episode, we're going to hear from an expert. Matt has been working on Wall Street for more than 20 years, and he drops these gold nuggets. What to be thinking about is I want you to be thinking about what the advice he's giving just businesses in general, what's still missing from the market, and how you could be applying some of this into your business if you're a public company or if you're not a public company. He does mention that public companies right now have a huge advantage compared to private companies. They have capital from their shareholders. One of the biggest issues that cannabis businesses face is that cash flow is highly, highly, highly hard to come by. Right? Because not only are you paying punitive taxes, 280E, but you're also dealing in an industry that's not banked. So you don't have the opportunity to get federal funding or any type of loans, right? And so a lot of companies decided to, take their company public. Now, as someone who's worked for public companies and in the finance and accounting arena, that is a very hard and daunting task to do. You have to have a lot of controls in place. You have to have a lot of money just to comply with the SEC reporting, right? And so I'm not suggesting that you go and think about taking your company public overnight. But it's interesting to see when companies go public, the amount of cash that's funded and injected in them. Now, what's also interesting to see, and what we've seen in, the MedMens and even the Canopies, is that they're operating at losses, massive losses. And the shareholders are not able to get the returns that maybe they thought about. Because remember, if you're in cannabis, you are in cannabis for the long run. It's interesting to see how the stock market, and again, some of my favorite quotes were from Matt, were all about the unpredictability of the stock market. Your gut might tell you one thing, logic might tell you one thing, but the stock market is going to do something completely different. So in this episode, we're going to uncover what businesses need to be thinking about, and you're also going to learn about what it's like to run a publicly traded fund in cannabis. I wanted to invite all of you listeners to join Cannabis Business Minds online. It's an opportunity for you to be able to list your business and list your services all for free. I believe that we're better together, and it's the time now to make sure that you are getting your business out there. So please join cannabisbusinessminds.com. You can create your free profile and list your products and your services and connect with myself and a lot of the guests that we have on the show.
Hi, I'm Matt Markiewicz, Managing Director of the Cannabis ETF, THCX.
So before we start, diving into what's happening right now, we just back up for a moment. You started the fund less than a year ago. For some of us that are unaware of, what is a fund? What is an ETF? There's six of, you mentioned there's 6 ETFs in cannabis. Can you just walk us through basics of why did you start this and what exactly did you start?
Sure. So an exchange traded fund, or ETF, is a open-ended mutual fund, meaning that it's you're always creating and redeeming shares. So there's not a fixed amount of shares like there is for a stock. So we launched the fund with 100,000 shares, and as demand from investors grows, so does the size of the fund in terms of the shares outstanding. So you actually create new shares of the fund. So think about an ETF as a mutual fund. It just trades on an exchange, like the New York Stock Exchange or the NASDAQ, and you have control over the price that you pay for that ETF. Unlike a mutual fund where when you send your money into a mutual fund company, you write your check, you send it in, you have no idea what you're paying for the shares of that mutual fund. You get the end of the day net asset value. But an ETF, if you want to buy it at 9:45 in the morning, 3:30, and then sell it at 3:30, you can do that. You can't do that. There's no what's called intraday liquidity on a mutual fund. You can buy a mutual fund one day and then potentially sell it the next, but you'll pay very high fees. There are no fees other than maybe a trading commission and the management fee for an ETF. And because of that liquidity, and it's one of the reasons that investors have used ETFs en masse over the past 15 years. I mean, there are over 2,000 ETFs listed in the United States, and there are dozens getting listed, more getting listed, every year. But
go ahead.
No, sorry. So again, there are a lot of benefits for, we can talk about why you would use an ETF over a mutual fund, but again, it's a vehicle that investors can use to not only get exposure to a certain sector of the market, healthcare, energy, but there are also other asset classes like fixed income or commodities that you can invest in with ETFs as well.
Oh, fascinating. And so my curiosity is, okay, so people are interested in this fund. What exactly are they investing in, right? Like what companies are associated with that? How does that work? And kind of specifically with your own, right? The one that we're talking about, yours.
Yeah. So we launched THCX, and that's the ticker symbol. So when just like IBM is IBM and Amazon is AMZN, the ticker symbol for the cannabis ETF that trades on the New York Stock Exchange is THCX. And we launched it because we wanted to give investors a way to invest in the global legal cannabis industry and not have to kind of do the research on their own and, decide on just one or two stocks, because it is a very volatile sector, right? And we can get into that, but that's why we launched the fund, is just to give investors, maybe a chance to get broader exposure to this growing industry, right? And from that standpoint, we had to pass the fund through a process with the Securities and Exchange Commission here in the U.S., the SEC. That process, that vetting process took, about twice as long as it did for another, like a normal ETF. Yeah. I was at a large asset manager before we started this firm, Innovation Shares. We launched 150 products when I was at that other asset manager, 150 ETFs rather, and I can't remember one of those 150 ETFs that took as long as this one. So the SEC took a very fine-tooth comb through the process to make sure that we were investing in companies that were legally operating in their jurisdictions. And part of that is we are not allowed to own stocks. I say we, the 6 cannabis ETFs are not allowed to own stocks that touch the marijuana plant in the United States. Hemp is okay, but if you're a medical cannabis company, say operating in New York, Massachusetts, and Pennsylvania, and you have a publicly traded stock, we are not allowed to own that stock. So that's why when I say the legal, THCX gives you access to the global legal cannabis industry. It does not at this time hold any U.S. cannabis companies. We get exposure to the U.S. market in other ways. We could talk about that, but from the SEC's perspective, because cannabis is not a legal.
It's a Schedule 1, right?
It's on Schedule 1. It's not a legal substance here in the U.S. Again, those stocks are not allowed to be held in the portfolio. In turn, they're also not allowed to list on the New York Stock Exchange or the NASDAQ.
Mm-hmm.
And so if you are a multi-state operator or an MSO, what happens is you have to go choose another exchange to list your shares. And that's an exchange up in Canada called the Canadian Securities Exchange. So you're playing by Canadian filing laws and Canadian market rules. A lot of the MSOs their stocks do trade in the US, but they trade on something called the
OTCV?
Yeah, over-the-counter. Yeah,
Mm-hmm.
so there are various levels of OTC trading, but that's where they trade. Stock's not listed on the OTC, it just trades OTC. So again, we cannot own OTC traded stocks in the ETF. Actually, no ETFs can own any of the ETFs are allowed to own OTC stocks in the US.
Oh, wow. I didn't know that. And so you mentioned it's a global fund. So is the ETF able to work with cannabis companies that are plant touching in Canada? Or is that, how does that work, I guess, crossing kind of foreign boundaries?
Yeah, so we have 31, as of March 2020, we have 31 companies in the portfolio, and 15 of them are what are called Canadian licensed producers. So these are the companies that are allowed to grow and distribute marijuana as sanctioned by the governing body in Canada, which is called Health Canada. So again, the majority of those, the portfolio is Canadian companies by weight. A lot of the Canadian companies actually have what's called a dual listing. So they're listed up in Canada and they're listed down in New York or on the NASDAQ. So, or some Canadian companies actually just went straight to the NASDAQ and don't even have a Canadian listing. So it's a Canadian company and they went right to the US markets for capital. Two examples are Tilray and Sundial growers. So they didn't even list their shares up in Canada. They went right to the US. And these are companies that I would say they IPO'd a little bit later than some of the other Canadian companies. So they understood the importance of accessing capital for the U.S. markets and telling their story to U.S. investors. A lot of the Canadian LPs that listed several years ago, they didn't probably meet listing requirements from a size or liquidity perspective, sales perspective. So they listed up in Canada, then they duly listed their shares down in the U.S.
Okay. What was your process? I mean, right now you mentioned there's a little bit more than 30 companies within this fund, and you mentioned also that there's so much scrutiny and almost double or triple the work with the SEC. What's the internal process? Offline, we talked about already it's hard to do due diligence on cannabis businesses just straight away. And then add on SEC layers. I used to do public accounting, so I'm well aware of just kind of the reporting requirements. But internally for you, what are kind of the things that you're looking for? Because you have to provide assurance to shareholders and people that are going to be investing in this. What is the assurance? What are you looking at for a cannabis company, for other people to invest into that fund?
Yeah, so THCX is something called a passively managed fund. So meaning the fund tracks an index. The index is built in-house by Innovation Shares. So we build the portfolio that the fund, we call it the fund tracks, right? And the whole idea is to mimic the performance of the index. An index is just theory. You can't invest in an index. You invest in an index by investing in a fund that tracks the index. It may seem a little confusing, but the S&P 500 is an index. You can't invest in the S&P 500. You have to invest in a 1940 Act fund, whether it be a mutual fund or an ETF that follows that index. So, we have a rules-based process for THCX's index. And the first rule, as sort of mandated by the SEC, and this gets back to what I was talking about earlier, is that we're only allowed to own stocks that trade on 5 exchanges. So Australia, New York, NASDAQ, Toronto, and what's called the Toronto Venture Exchange. So if a stock is not listed on any of those exchanges, we're not allowed to own it. So again, those bulletin board stocks, the OTC stocks, automatically not eligible to be in the index of the fund. Secondly, we have a minimum market cap requirement of $100 million US for initial inclusion in the index. So that ensures investors that there's at least a size there that they should feel, while most people will call $100 million a micro cap company, most of the cannabis stocks, of which there are 130 plus at this point that are publicly traded, fall below that 100 million market cap, right? So that you want to have as an investor a certain, I guess, comfort in knowing that the companies that you're investing in or that the fund is investing in is size, and there's some liquidity requirements there, and meaning they can. They're trading enough when we need to rebalance our portfolio. You're not going to spend too much to do that because there's a cost in rebalancing that portfolio. So again, 100 million market cap has to be listed on those 5 exchanges. We also use something that's proprietary to Innovation Shares. We have a natural language processing algorithm that looks at media sentiment.
Oh, wow.
And the media, what especially in cannabis, and what people do is there's not a ton of Wall Street research out there, so they go to the media to do their, they read articles on Bloomberg, Forbes, Market Watch, whatever it is. So we have an algorithm that will be able to identify keywords and be able to essentially score, give a sentiment score to companies based on the articles that the algorithm is reading. It'd be very similar to you doing a Google search and you want to invest in cannabis and you don't know much about it, and then you read 5 articles and 3 articles they mention company ABC very negatively and company DEF is mentioned very positively. You're most likely to go and buy company DEF.
Yeah.
Right? So sentiment generally is a driver of behavior. So we use this media sentiment process, and it's not social media. It just looks at relevant and credible media sources: Forbes, Bloomberg, Reuters, Market Watch. It's not looking at Facebook and LinkedIn. So it's this sentiment overlay is basically our sanity check to in terms of not include companies in the portfolio that may have a very overall negative relative sentiment. Now, again, relative is the key word, because if you read articles in the cannabis sector right now, not much is positive, right? And it hasn't been for a while. But if we just use an absolute score, we'd have 5 companies in the portfolio, and that's not allowed. You need at least a minimum of 20 companies to have a U.S. listed exchange traded fund. So it's all about relative. Which stock has higher positive relative sentiment score, given what's going on relative to the rest of the portfolio.
Relative to the whole kind of market. Well, I find it interesting because I know that a lot of the companies that are traded on the OTC have a lot of, I feel like so much of it is like this pump and dump mentality. They'll release a PR, like a press release, and it doesn't get picked up anywhere, but oh my God, we have this new innovative thing. And that's so deceptive. So what I like that there is some trust within only taking these news sources that are credible and kind of indexing it against that. So those are 3. Are there any other areas that you're looking at for criteria for these companies?
No, that's generally it. And so it's size. We have our media overlay, and then it has to be listed on one of those exchanges, and again operating legally in the jurisdiction where they're doing business.
Okay. So I think one of the most fascinating things is why, and we talked about this a bit offline, why so many cannabis companies just aren't doing so well. You can break it down into kind of before COVID-19, right? You can break it down into kind of cash flow, poor management. I'm doing a 4-part piece right now on MedMen and just kind of analyzing all of the stuff that kind of happened with this company. And so there's so many different things that impact, I think, a stock price or just how a company is doing. What kind of insight can you bring on, where the market was at the beginning of 2019 and where it is right now, and why, if you can think of a few things of why that's happened?
Well, there are a couple factors here. One is that, we sort of need to segregate the U.S. market from the Canadian market.
Okay, point number one.
That's very important for investors or just the public to understand that there are just different market dynamics driving each of the cannabis markets. And given the fact that I'm not allowed to invest in the U.S. companies, I don't follow the U.S. stocks as much. I do them because I do follow them, from just needing to know the industry perspective. But Canada is sort of our main focus. So we can kind of go into both markets. I know I can talk maybe just high level about both, but in the end, right, in the beginning of 2019, you had a lot of optimism that there were 2 pieces of legislation that had a chance of at least getting, making some headway in the U.S. That one being the Safe Banking Act, 2 being the States Act. Outside of the Safe Banking Act passing the House in September of 2019, nothing happened. I mean, there were just the catalysts that people were hoping for at a federal level in the U.S. failed to materialize. You just didn't have enough support. You also had a lot of distraction with the Trump impeachment hearings that kind of derailed a lot of things later in 2019. So that really helped to crush sentiment on a national level, right? Which is what the U.S. really needs to move the cannabis agenda forward. I mean, nothing will happen in this country on a grand scale until cannabis is removed, from the schedule, right? You also had last kind of April, May, 2 densely populated, high-profile states in New York and New Jersey that failed to pass adult use measures, and there was a lot of anticipation that if those states would have passed, then that would have snowballed into the entire Northeast, and other states would have looked at, and that just didn't happen. Right. So we're hoping that this year is a different story. It's on the ballot in November for New Jersey. New York, it is part of the budget process, which we should, be hearing about in a couple of weeks here. Of course, who knows what's happening now, but I will say, as a kind of an aside here, there are going to be massive holes in state budgets all throughout this country. And, I think regulators and legislators need to start looking at cannabis as a way to bridge some of the, the tax loss. And I'm hoping that, cannabis, this should be inserted into the conversation. Hey, if we legalize cannabis,
this is what it can do for tax revenue.
Here's what the tax impact could be, right? And think about the states that that do have legalized cannabis right now. I bet Illinois is kind of like, I can't believe that thankfully we got that done, right? Because now they're having it. Illinois has been, I'd say, by all intents and purposes, a success story so far in terms of sales and what people had expected. But now they have cannabis, tax income to help bolster state finances, right? As opposed to states like New York and New Jersey, which failed to pass cannabis measures last year. They could have been in a much better situation. And now, they're going to be scrambling to
try to even implement the regulation, right? To first
pass it, now they're distracted with COVID-19, damage assessment and everything like that. So, hopefully it does get passed, but, you got to wonder, if they would have passed these measures last year, would they be in a much better position right now, because at the end of the day, and we've kind of seen this the past 3-4 weeks, people are not going to curtail cannabis consumption, because of what's going on. And actually, we've seen a rush to stockpile cannabis both in Canada and the U.S. over the past couple of weeks, and we've actually seen, just really, especially up in Canada, very solid inventory sell downs. Hopefully, we're going to see some restocking coming through because of people's fears about, getting shut in. And although you can order online in Canada, it's people still want to go to the store, speak to the bud tender, that type of thing. And you're going to try to get it now, because if they shut everybody in the U.S. and Canada, we're going to have, bigger problems. And again, I don't think people are going to curtail. They're going to sit at home and,
Oh, exactly. I think that, I talked to a colleague, head of sales, and she's like, this is the busiest that I've been in a very, very long time. She's like, what's happening though right now, California, is that the lab facilities, because everything still needs to get batch tested and lab tested before full production can even happen and get the COA. They're sending employees home. Makes sense. It's kind of health related. So that's kind of where some of the bottlenecks they're even just seeing from the sales front is. But I look at also, again, California. I think that's because I spent most of my time there. Of some of the cities kind of said everything is closed. And now they're reopening cannabis shops. And so I'm curious, with your you look at kind of the trend right now of the entire market, and it's crashing. And then you look at some of the stuff that's happening in cannabis, and it is following. But where do you see, again, we talked about this is unprecedented, but where do you see if there are certain industries that seem like they actually will go up during a period of such turmoil? How does that also trend kind of with the market?
Well, that sort of just gets back to your question earlier, which I really didn't, I guess, do a great job in answering, is that we've seen a disconnect between stock prices and sales trends, right? So cannabis sales in the U.S. were up around 30% year on year. There's 5 consecutive years of sales growth. Just about any other industry, would you see stock prices crash if you saw a 30% increase in sales growth? No, that generally does not happen, right? I mean, you're seeing strong growth in revenues. You're seeing expansion of footprints for a lot of the MSOs, getting licenses, and so there's been this massive disconnect with stock prices and the actual fundamentals of the market. And it makes a lot of fundamental stock pickers and especially research analysts extremely frustrated, right? That this is happening. And, it's a dynamic that, you think, oh, this can't continue, but it has continued. And, when over the last few weeks here with the market, with the S&P down, let's see, since February 20th, the S&P is down 29%.
Wow.
And cannabis stocks are down about 60%. So,
wow.
Yeah, you're seeing just, when people panic and they're afraid, they sell anything that's risky. And cannabis stocks, do represent as a growth sector, as a growth theme, they do represent one of the riskier areas of the stock market. And because of the people panicking, cannabis stocks are going to be the first to go. So again, there's a disconnect between the fundamentals. We've seen fantastic demand over the past few weeks. As I mentioned, I'm in Connecticut right now, not in my Manhattan office, and I have a THCX hat that I kind of that I wear, and people at the stores are like, oh, that's a great hat, man, awesome. And one guy at the butcher told me I ran up to Massachusetts on Sunday and bought all I could. All the weed that I could. And then I had another, checkout person at the supermarket said, oh, I'm going to Massachusetts tomorrow. So you're seeing this demand from a recreational aspect anyway. Again, we got to remember, people use this as medicine too, right? So they should
Exactly. Yeah.
That's another reason why, for the medicinal holders who do have, a medical need for cannabis, they shouldn't be denied the product. So that's why I'm hoping the dispensaries will be kept open, just like any pharmacy would, right? It's like a CVS or Walgreens dispensary should be kept open as well, because the plant is being used as medicine. So, you should, that's the whole argument. You shouldn't have to have a card or, anything else to have this medicine. So, you are seeing this massive surge of demand, and just like little anecdotes like mine and yours, and I think you're probably seeing that at a nationwide level, and it's happening in Canada as well. So again, that disconnect between fundamentals and stock prices, like you have to think, like, how long can that last? But there's a really, kind of a famous saying in the markets that the market can remain irrational far longer than you can remain solvent. Right. And then that's the problem, is that you have a very retail dominated investor base in cannabis, and you don't have that institutional shareholder backdrop. And if nothing else from this call, I want everyone to really, and you to understand something, is that right now about 9% of publicly traded cannabis market cap is owned by U.S. institutional investors. Okay, and that compares to 68% U.S. institutional ownership of the S&P 500 and 80% of the Russell 3000, so the 3,000 largest stocks, by U.S. institutions. So there's a very, very minuscule institutional shareholder base. And you might say, oh, well, why does that matter? Well, it matters because institutions are buffers during normal stock market times, right? They don't sort of shoot first and ask questions later, right? They have large holdings in companies, and it takes time to move large chunks of stock. And let's say, again, not this time, not the past couple of weeks, withstanding, because you're seeing it's a completely different market dynamic. It's a bit of an outlier event. But if you see Amazon stock down 15% in 3 days off of no news, chances are there's an institutional investor getting out of the position, but there's probably some other institutional investor getting into the position once they see that sell-off, right? And they see they act as that buffer, that sort of that shock absorber. Right now, the cannabis stock market has no
shock absorber,
nothing. It's just not there. Again, getting back to that 9%. So that 9% speaks to the fact that cannabis is not legal in the US, right? So most institutions are not able to buy cannabis stocks. A lot of those institutions, the biggest institutional investors in this country, they manage pension plans for government entities. So they're prohibited from owning cannabis stocks. So everyone has to realize that it's not that they don't want to, it's that they can't. Their charters do not allow them to invest in this industry. So until that changes, you are going to see heightened volatility, crazy moves in these stocks that may just not even, seem like it's.
It just doesn't. They almost don't even make sense. They just
they don't make sense. And again, that's not trading on fundamentals. And because of that, until you see those institutional owners get in, then you're going to see that volatility. And that really gets back to the core of why we launched this ETF, which is you're building a diverse portfolio of companies that have exposure to the industry, right? You're not trying to pick one or two stocks and think that they're going to be the winners, because no one knows who the winner is going to be right now up in Canada and the US, right? So it's better to just get exposure to the industry that's on the trend that we discussed, but not having to pick one or two stocks, right?
Yeah, exactly. I mean, because it just kind of diversifies your own risk. Matt, who are the other 91%? Are they just individuals then? Like what, if it's 9% institution in cannabis, what's the 91%?
Yeah, it's retail investors.
Retail investors.
Right? Retail investors, are the first to sell and the last to buy usually. So, you have these, there's no more volatile sector than cannabis stocks. I mean, you'll see, month to month, you may have a stock that's up 30% in a month and it's down 60%. and then it's down, and then it's up 20%, down 15%.
Mm-hmm.
Outside of maybe biotechnology stocks, there are no industries that have this type of volatility.
Okay.
And again, it's a very retail and hedge fund dominated industry. And hedge funds, you have to remember, they go long stocks, so they own stocks thinking it's going to go up, but they also short stocks in hopes that they go down. So you have those pressures, on cannabis stocks that just don't exist for, say, a stock like Amazon or Intel or Square or Goldman Sachs stock, for instance, right? It's just, you have a lot more institutional long ownership in these funds that sort of protects a little bit on the downside. There are also a lot of index funds that own large and mid cap stocks, right? And as we talked about the massive growth that we've seen in the ETF industry over the past 15 years, no cannabis stocks aren't included in the S&P 500. Cannabis stocks are not included in the S&P 600 or the Russell 2000.
And they won't be until until cannabis is federally legal, correct?
Correct. Yeah. So you don't have this passive index money that all of the, blue chip names are in. I mean, yes, they're falling now, but that's why cannabis is falling faster, because they're not part of these indexes, right? That's why, our ETF offers a very unique exposure, that when you own stocks on our portfolio, when you own THCX, you're owning stocks that aren't part of a larger mutual fund or ETF. And that's, one reason that investors have flocked to the cannabis ETFs, even in the fact that our fund is, down 50% year to date, we still have 7 million of inflows, meaning we have people who are putting money net into the fund.
Yeah. So one of the things that just seems like should be a priority, especially kind of what's happening right now, is that there should be some push to talk about federal legalization. 2020, it's an election year. Obviously with COVID-19, who knows, because it seems like there's bigger priorities. But when you think about balancing a huge deficit or even trying to kind of tackle a deficit, and you think about how cannabis could be taxed at the federal level, that's several podcasts, right? I don't want to go into kind of theory there, but I'm curious what the work that you're doing. Is this a discussion that you're having with other people about the importance of federal legalization? And if so, can you talk a little bit about that?
Yeah, but listen, everyone in the industry knows how important it is.
Yeah.
Right? But that's preaching to the choir. There are
exactly.
a lot of lawmakers in the U.S. that need to be convinced on why it won't do harm to the public from a health perspective, and then marry that with the potential revenue implication on a tax perspective, and there's just like everything in life, you're fighting for mind share, and it just seems like the cannabis industry has really been kind of had some bad breaks between the impeachment hearings that slowed down the Safe Banking Act, right? That would give, normal banking access to U.S. cannabis companies. And then obviously now, with COVID-19, cannabis is on the back burner, and at the federal level. And it's not something that, it's not something that I anticipate anyway, that's going to be kind of brought to the forefront for a while. Obviously we had Bernie Sanders make comments that he would legalize cannabis the first 100 days in office. I mean, it's not really even possible. We'll see kind of where Biden stands on that. It seems like he's been not necessarily against it, but I wouldn't necessarily call him pro cannabis. What happens at the presidential level and who wins in November, of course, I think a lot of that's going to be determined by what happens not only in the stock market, but how many lives are lost in this country, unfortunately, because of COVID-19 and the administration's response to everything. But again, cannabis is just on the back burner right now. So it's not something that I anticipate there'll be a major push to get anything done, because quite frankly, the country has bigger problems right now. And again, this is just another bad break for the cannabis industry. And we all know it's going to happen, but it's just a matter of when.
Of now when.
Yeah, it's a waiting game in the U.S. And I think Canada, as the first developed country in the world to legalize recreational adult use, we can probably learn a lot from that model, as can other countries, and pick up some good things and some bad things on what they did. And then getting back to your original question about kind of the state of the markets, and Canada's fallen down on sort of how they rolled out their legalization plans, and that's one of the reasons why the stocks in Canada have sold off over the past, call it 10, 11 months, is that Health Canada has failed to open stores in the most populous provinces of Quebec and Ontario at the rate that people and analysts, investors had expected. And because of that, you had sales expectations were here, but if you only have enough stores to service a fraction of the population, you're kind of like, this is where your sales are going to come in, right? Yeah. And the government is controlling that pace of store openings, especially in Ontario, and they have made some improvements to the system. We are seeing an acceleration of store openings so far this year. That's been encouraging, and in Ontario particularly. And again, that's where most of the people live in Canada, in Ontario and Quebec. So what it did, unfortunately, is it just sent people to the illicit market, or kept them, going through through illicit channels, right? And the prices have been competitive in the illicit market, so it's not a price discussion. There have been, supply delays early on in Canada's legalization process. So, it's just growing pains associated with a nascent industry, and everyone had too rosy of expectations, I think, to, when things legalize in Canada, to really, deliver. Like, it's not something that, you could have anticipated it, but I think a lot of people who really did their homework and just spent their time analyzing nothing but cannabis companies, they realize, hey, like, everyone's expectations are here based on the structure up in Canada. Things are going to come in here, and stock prices were here. There's only one way they're going to go. Yeah. And now we're at this point. I feel we're at this, rational level of expectations around sales and demand, and we're starting to normalize so that hopefully we can build off this base. I'm not calling a bottom in the cannabis stock market here up in Canada, but I think we're getting close to that point.
Okay. All right. Well, one more question before we get to the speed round. And this question much more is targeting, I guess, business owners and entrepreneurs, and really people that might be running their business, or insight for people just right now with what you do is what do you think people should be focused on business-wise if they're running their business? You work with someone, right? Like, just with your lens that you...
Yeah. So from our perspective, I also meet with a lot of private cannabis companies too, who are, maybe close to going public, right? Okay. And, they are not, ready to do so because of the market conditions, whatever it may be. But, the bottom line is that this new industry, you have people running it that who are executives, that they're not corporate people. There's nothing against that, but there might be business operators. But when you're trying to bring a company public, okay, you need investors have certain expectations. So my advice is that have your financials cleaned up, have a clear and visible path of how you're going to grow sales, be realistic about your costs, right?
Yes, underscore that. That.
A lot of, listen, public companies are having this issue right now, especially up in Canada, because they were running at a cost level here. They probably should have been here, considering that we knew sales are going to be capped based on the amount of stores, right? It just gets back to the market dynamics. So if you know sales are going to be lower, you have to cut your costs. It's sort of basic It's basic math. And I feel like a lot of cannabis executives are out of touch with that reality, that if sales are going to be lower, you can't keep pumping marketing dollars to fix the problem, because nothing is going to help that. So for a US business owner, I would take that same approach. Take the lesson that we've learned up in Canada, which is if the market dynamics say your sales are only going to be here and you think they're going to be here, don't keep pumping a lot of money into marketing and branding, because chances are the market size is going to be a lot smaller. So biggest takeaway, just be realistic about your forecasts, provide visible and transparent forecasts to your investor base, because listen, capital is very scarce, especially right now, given the past month's events, and you needing to raise money is not the first thing on most investors' minds at this point. They're going to be investors who are going to be happy. They still, are going to be happy to kind of lend money and invest in good quality companies. But at the end of the day, investors are going to want to see that you've exhibited, strong financial discipline in your spending, and the companies that have, the best balance sheets in the end are the ones that are going to be, victorious in this race to build out brands and companies.
Oh yeah. All about that current ratio. Okay. You ready for the speed round?
Let's do it.
All right. What is one piece of advice that you would give somebody just getting into the industry?
Be realistic about your expectations.
Excellent. What's your why? Why did you decide to start this? Why are you interested in cannabis? Like, what is it that kind of gets you up every day doing what you're doing?
I love the fact that it is a growth industry. It's very nascent. There's a lot of uncertainty, but I feel, given my 2 decades exposure and experience on Wall Street, that I can bring, hopefully some a sane voice to investors in the industry. And I think that it's exciting, right? It's very new. It is volatile, but with that volatility, comes opportunity. So I'd like to be at the forefront of that opportunity.
Excellent. Last question. It's a tough one. Where do you think the cannabis industry is headed?
Well, we've had 5 consecutive years of sales growth in the U.S., right? We were up, as I said, close to 30% year on year growth. And this is an $18 billion industry next year, up from $11 billion in 2019. I don't necessarily know. I'm not going to put specific numbers around where it's going to be in 10 years. I just know it's going to be a lot larger, but given the uncertainty, surrounding states and federal, you have to be cautiously optimistic and invest accordingly on it. So again, I'm cautiously optimistic in the near term, very aggressively optimistic in the longer term. It just kind of depends on what shakes out at the federal level in the U.S.
Excellent. And then how can our listeners find out more about you and THCX?
So we have our website. It's THCXETF.com, and you'll find our fact sheet on there. Our holdings in the portfolio are listed every single day. The portfolio is completely transparent, so you know what the fund holds. Again, every single day. The weights of the portfolio are updated daily. And part of we always used to like to joke about that even though it's ETF, there are actually 3 T's in ETF. It's tradability, tax efficiency, and transparency. So again, being able to know exactly what you own every single day, I feel is important for investors. And knowing that you're not just owning a seed to sale story. You have exposure to what I call the various sub themes in the industry. You mentioned testing before, right? We have a company that's involved, a publicly traded company that does lab testing for and provides equipment for cannabis companies.
Oh, wow.
We have ancillary products like a Scott's Miracle Grow that has their Hawthorne Garden brand division has 42 brands in there that service growers in the U.S. and Canada. We have biotech companies in there that are developing cannabinoid-based medicines. We didn't really even get into that. So with THCX, you're getting, various slices of the industry. Again, it's not, people have to sort of broaden their horizons. Cannabis.
Yes. It's not just a cultivator. It's
seed, watching it grow, trimming, drying, selling, right? There's a lot more to this industry that I think people need to understand is out there. And you're going to see a lot more public companies over the next couple of years that are involved in things other than growing and distributing the actual plant.
Good. We need to kind of have that balanced ecosystem represented, and it makes me quite excited. Well, thank you again so much for sharing all of your insight. You're right, we didn't get to cover so many different things, so we'll have to get you on the show again. But thank you for your time.
Thanks for having me.
Thank you for listening to today's show. This is your host, Simone Samaluka-Radzins of Calagia.com. I hope that you find this episode entertaining and insightful. My goal is to educate all of you about this exciting business because knowledge is power. If you haven't already, head on over to Calagia.com to connect with me and to meet other business leaders in the professional cannabis community. Also, if you like this, please go into iTunes and leave the Cannabis Business Minds podcast a 5-star.